Today, some news most Americans have been waiting for. The cost of cars and trucks in the United States is finally dropping. And new research shows the downward trend has been quite significant on vehicle prices already. Experts at InvestorPlace.com are warning that the latest developments are in fact proof that the auto market crash has begun, especially considering how fast these changes are occurring. In this environment of higher interest rates and rising inventory levels, Blue Book values have been consistently declining, with analysts projecting a reversal in the market happening this spring and alerting that prices are on their way to find a bottom. We're officially in a buyer's market, they say. Dealer incentives are up 102% year over year, according to fresh data. We're now being told that the long-awaited crash is going to give Americans much better chances of finding an affordable vehicle in 2024, and also that the conditions which helped to fuel the auto price bubble and overall inflation for nearly 3 years are no longer in place, setting in motion the much-needed correction everyone has been expecting. Cox Automotive reports that the recent price declines are due to a vastly expanded number of vehicles on dealer lots after years of severe shortages. With more cars and trucks available, the pressures that had sent prices surging are disappearing at last. At the start of April, American dealers had almost 3 million new cars, trucks, and SUVs on their lots. For comparison, 1 year ago, that supply was standing at just 1.7 million. This is one of the reasons why many analysts and dealers say 2024 will be the most affordable year of the past 5 in which to buy a new car or truck. When the lots are empty, there's not much of a bargaining position from a consumer standpoint, explained Glenn Mears, owner of a Ford dealership group around Canton and Dover, Ohio. But now that we have inventory, it's much more competitive, much more like it has been historically. During the pandemic, a worldwide shortage of computer chips, which are vital to auto manufacturing, forced plants to curb production, causing price spikes all around the globe. As vehicle availability shrank, the car bubble grew. By 2021, some dealers had no new cars at all in stock. Many frustrated buyers turned instead to the used market. The resulting surge in demand for used cars caused those prices to soar too, elbowing many people out of the auto market entirely. But with computer chips now abundant, auto production is rising steadily, leading to an inventory glut in many cities around the country. Consequently, the average price for both new and used cars is going down at a brisk pace. In the past 5 years, new cars faced an average increase of an impressive $17,000, reaching over $55,000 during the peak of the bubble. But since January, the scenario has meaningfully changed, and according to data collected by Edmunds.com, the average price for a new vehicle is sitting at $45,283 right now. Though the drop hasn't brought the market back to pre-pandemic levels yet, experts predict that prices will keep falling this year, especially for new vehicles, as availability grows and automakers are compelled to go to lower prices. If you're looking to buy a car, just wait. The market is about to crash, and no one can tell me I'm wrong, predicts Omar Afania, known as the richest car dealer on TikTok. In a viral video which currently has 1.4 million views, Afania warns that an influx of repossessed autos currently flooding the market is a sure indicator that the United States auto market is close to bottoming out. When a company repos a car, they send it to auction to try and recoup some of the money that's owed on that vehicle, he explains. The car dealer highlights that many people bought cars using stimulus money during the health crisis at inflated prices, resulting in negative equity. Like a lot of negative equity, he stressed, from the car being overpriced, interest rates, and a low down payment. But now that a nationwide correction has begun, Afania argues many people are simply refusing to pay their inflated monthly car payments. As a result, the number of cars being repossessed is going through the roof. What that's done is it's created an influx of cars at the auction, cars that people like me don't want to overpay for. There's a reason my lot is half empty, he tells his viewers, saying that he's unwilling to pay the inflated auction prices. There are now millions of vehicles in the market that finance companies have not been able to offload to dealers at auction. Mark my words, Afania says, car prices are gonna drop like a rock. On the comment section, one of Afania's viewers backed up his claims. They commented, "He's telling the truth. I work in car finance. I'm a manager. Lots of people simply cannot pay." On the same note, several market analysts say they expect new and used auto prices to fall further this spring and beyond, despite the fact that we're historically in the middle of the peak buying season. Last month, automaker discounts on new vehicles, including rebates and low-interest financing, averaged $1,469 per vehicle, 5 times what they averaged a year earlier. What we anticipate is that there will be significantly more discounting, more incentives, said Michel Krebs, executive analyst for Cox Automotive. We're already seeing that. Automakers are offering even bigger discounts for slower-selling vehicles, said Ivan Drury, the director of insights at Edmunds. He added that discounting will extend to additional vehicles in the coming weeks and months, meaning that buyers who don't need a vehicle right now might be wise to wait a little longer. While consumers may feel some relief in vehicle prices and incentives, automakers and dealers are feeling the results of the downward price pressure, added Rebecca Radzewski, research manager at Cox Automotive. The latest dealer sentiment survey by Cox Automotive clearly indicates that dealers are seeing profits contract as inventory levels return to normal and incentives are turned up to help stimulate sales. Of the 35 brands that Kelley Blue Book included in its latest analysis, 16 reported year-over-year price cuts in March, with the largest declines recorded for Tesla, minus 20.5%, Buick, minus 6.4%, Land Rover, minus 6%, and Nissan, minus 5.7%. Meanwhile, new vehicle average transaction prices last month declined by 2.7% and are now down 5.4% from December. The average incentive spend from manufacturers increased 11% to $3,121, a 102% surge year over year. Reaching the highest level since May 2021, incentives as a percentage of average transaction price increased to 6.6%, up from 5.9% in February, more than double the average of 3.2% recorded in March 1 year ago. More automakers offered incentive packages over 10% of ATP in March compared to February. Incentives were highest for Polestar, Lucid, Tesla, Infiniti, Mini, Nissan, and Volkswagen, according to Blue Book estimates. Only 3 automakers, Land Rover, Porsche, and Toyota, had incentives at or below 3.2% of ATP, the average incentive 1 year ago. When we look at price strength, the pandemic created a seller's market in which new vehicles were transacting above manufacturers' suggested retail price in 2022, said Michel Krebs, executive analyst for Cox Automotive. That market is all but gone now, as high inventory has led to higher incentives and discounts, lower margins for dealers, and vehicles are now typically selling for under MSRP. The shift from a seller's market to a buyer's market is well underway, Krebs stressed. The CEO of CarParts.com, David Menyani, also expects the downward trend to persist until the end of 2024. During an interview with Go Banking Rates, Menyani noted that the timing of your purchase in 2024 will influence your price. Fall and winter will be the best seasons to purchase a vehicle, he explained. Waiting until year-end may yield substantial discounts. So far, all vehicle segments have experienced declines, notably luxury cars, 13.2%, SUVs, 13.5%, compact cars 16.9%, mid-size cars 15.9%, and pickups 14.6% compared to a year ago levels. Sharp price cuts by Ford and Tesla, along with the introduction of some more affordable models, also helped lower average EV prices. Electric vehicles depreciated the most annually, dropping on average by 16.1%, some models selling for 30% below the MRSP, Cox Auto Research showed. Additionally, Maniani anticipates notable price drops for used SUVs and sedans due to ongoing turmoil in the global oil market. Competitive pricing from manufacturers may sway consumers towards larger, less fuel-efficient vehicles, he said. Higher interest rates can actually make buying a new car more attractive to drivers than purchasing a used model. Prices for some 1- and 2-year-old vehicles are nearly as expensive as the prices automakers are charging for new vehicles, researchers have found. Low-mileage 2023 Honda Accord EX models, for instance, are being advertised at close to $28,000. At $31,000, the base price for a new one, including shipping, is not much more. With an average used vehicle loan rate of 11.5%, it might be more cost-effective to pay slightly more for a new vehicle in order to secure a reduced rate from an automaker's finance arm. Still, the first 15 days of April saw a 13.8% decline in wholesale used car prices. That marked a notable shift in market dynamics compared to the previous year. Rebecca Lindland, Senior Director at Cars.com, predicts further improvements for buyers, noting that the rate of used cars selling for less than $19,000 and the rate of new cars selling for less than $30,000 is expected to increase from 18% and 13% respectively to 22% and 17% by the fall. Compared to this time in 2023, low price availability has already risen by 63%. As inventory and production recover, the beginning of a buyer's market is offering reassurance for prospective buyers and investors alike. This will be the first time in almost half a decade Americans will see some relief at dealer lots. Initially, the car market crash experts and analysts were talking about seemed way too distant from reality. But now we can see how rapidly things can change before our eyes. Though it may take a couple of months before the market hits a bottom, we're already witnessing this historic correction unfold. And those who are waiting for the right opportunity to arise should stay alert not to miss the chance to get their desired vehicle at significantly lower prices. What's your experience? We look forward to seeing your comments below, and thank you very much for watching. Please subscribe if you value our service.